What if you don't even know how to use the earnings charts? What if you're confused about what earnings season is all about and how you can use these charts on Zacks.com to your advantage? Well, I thought we'd take a look today at what are these charts? How do you use them? What are those little arrows on the chart? What do they mean? And just dive in with a few examples on how you can use the Zacks earnings charts, what you can do with them, why they're important during earnings season, what they tell us about a certain company during earnings season. So let's dive right in for some examples of what is so good about the Zacks earnings charts and how can you use them. So this is the first example with Johnson & Johnson, ticker JNJ. And if you're just looking at this, you're thinking, what does this mean? What are all these green arrows? Why should I care? Well, Johnson & Johnson is an earnings all-star. It is one of the few companies that has maintained a 5-year earnings surprise track record. It is met or beat every quarter for 5 years. So that's what these little green arrows mean. The green means a beat or a meet. It could mean a meet. And if you saw some red on here, those would mean earnings surprise misses. So the analysts come out with their consensus estimates. The company tries to beat them. That's the name of the game, right? And if they do, they get a chart that looks like this. Now, this one is even more impressive than you might think because that big downturn there in 2020 was the start of the pandemic. Many companies missed in that first quarter there and subsequent quarters after that because things in the global economy were so messed up. But Johnson & Johnson did not. So that's what is impressive about this chart. Now, something else you should know when you're using these is that you can scroll over the little green arrow and you can get the earnings surprise like data on there and you'll see what percentage it was. So on this chart, most of these little green arrows are little green arrows. And what I mean by that is that they are small. So that is telling us that they either met in this quarter or the beat was very small. And you can see the last quarter's beat was just 2.4%. But I'm going to show you in a second some charts that have longer green arrows. That means the beat is bigger. And why should you care? Well, it's going to tell you something if you're trading this stock. If I was trading Johnson & Johnson on the earnings report, this is telling me they have a great track record of meeting or beating, but they don't do it by much. So this is probably not one I really want to, do on a trade on the earnings because they're not going to give me that explosive beat, the unexpectedness of it, and, maybe see these shares really take off on some kind of big beat. But that being said, if you are looking for a company that has this good, solid track record, I wouldn't bet against them, that's for sure. Another thing to always keep in mind, however, with the Zacks earnings charts is that this is just earnings. It's not revenue, and it doesn't tell us anything about guidance. So it's just looking at this one component, and there are other things wrapped up into an earnings report that could move the stock. So get a lot of complaints on Twitter about, this is just the earnings surprise. Yes, it is. But it does tell you that Johnson & Johnson has very good communication with the analysts because they're able to meet or beat every quarter for 5 years. So let's look at another company that we all know, Shopify, ticker SHOP. Now, I chose this chart because up until 2021, it had that tremendous track record. Now you can see the bigger green arrows than you could see on Johnson & Johnson. And these green arrows are telling you these were enormous beats. You can also scroll over these again, and you can see the last green arrow in 2021 was an earnings surprise of 128%. These are explosive beats. But then they started to have some misses. That first miss there in 2021, it also has a bigger red arrow with those little dashes. The dashes indicate that that is a bigger order of magnitude miss. And this one is showing it was 36%. Then we see these other big green arrows in 2022, 75% and 200% miss. So it's key to also look at the green arrows to see what the magnitude is on the miss. You already basically know from a visual that it wasn't good, right? On those red arrows, that those were big misses, and also that it was good on the big green arrows that you can see there on the chart too. But as you can see, the stock did have the decline, but not initially. After that first miss in 2021, it still got a pop there on that earnings miss, but then now has sunk in 2022 along with the other growth stocks. Let's take a look at another chart that is more mysterious. Now, I cut off the ticker on this one, but you can see what it is still up there. But on a quick glance, you might not think that this was Alphabet, right? Look at all those red arrows. So for years, Alphabet didn't care if it met or beat or if it missed. And obviously the street didn't care either. So from 2014 to 2016, there in the middle of the chart, it missed 8 quarters in a row. It missed for 2 years straight. Nobody, cared though. Although maybe they did, because in 24 and part of 2015, the stock went nowhere. But then finally it started taking off and moving higher. And this is what it now looks like. So the company did, after the initial miss there in the coronavirus pandemic, right when it hit in 2020, it did put together that great string of beats, and not just any beats, but big beats there, because they were really benefiting during the pandemic. But now the shares have pulled back and we see 3 misses there in a row. But again, for Alphabet, in the past at least, the street hasn't really cared about those misses, but maybe they do now, because the shares are on the decline during this missing period here, and they were on the rise during all those beats there. So why do we look at the Zacks earnings charts? Because it can tell trends like this. The street likes when companies beat quarter after quarter after quarter, especially huge beats like we saw with Alphabet over those couple of years there. So the shares really responded, and you can see that in the chart. So that's one of the reasons we do look at these earnings charts and why they are so fascinating. Now let's take a look at another big winner during the pandemic, Wayfair. You can see all those huge green arrows there. It actually didn't move the stock that much, maybe because everybody knew it was kind of a pandemic play. And now we do have the sell-off and the misses starting there in 2022. They did have a slight beat or meet. Let's look. It was a meet last quarter. Not enough to do much for the stock, but this is another one where the earnings surprises are showing a pattern in what was happening in the business. And now the misses are also showing a pattern. And then I want to wrap up with a company that it might not matter whether or not there's a meet or a beat. This type of company, a recent IPO, Skills, ticker SKLZ. You can see it went IPO there or went public in 2020. I'm not sure if this was a SPAC or not. And initially got that pop into 2021, but the shares have been trading off as the growth stocks are out of favor. It is trading under $1 now, yet it has had those earnings surprise 3 in a row there in 2022. It hasn't really mattered because it's not always about the earnings surprise. But it can be about the other things I mentioned earlier, guidance and sales, and just whether or not growth stocks or value, pick your flavor, are in at any particular time. Also, a company could be in an out of favor industry. And so that's why the stock is getting beat up. But as we saw in prior charts, once a company starts putting together a nice string of beats, that's usually when I want to take a look because possibly something's happening behind the scenes or they're not communicating very well with the analysts on Wall Street about what's happening with the company. So that's something you have to dig in a little bit deeper that the chart doesn't show you. But I like to look at the charts that are like Johnson and Johnson, the charts where they haven't missed for 5 years. It's not easy to do, and a lot of people can trade these charts based on what the company has done in the past. Some companies are just known for missing, as I said. Some companies are known for beating and take great pride that they have beat all those years in a row. So if you are trading these charts on the earnings report, they're very valuable and give you a lot of good information about what may happen. But again, reminder that there's more than just the earnings, there's revenue and guidance. So keep that in mind. So earnings season does start this week. It's led off by the big banks. I'm going to have an earnings all-stars video about those banks and what their charts look like. But now you know a little bit more behind the scenes if you're watching these videos, or if you're just kind of curious, what are these earnings charts? How can I use them? What are those green arrows on the screen? Why should I care? Now you know. And it makes earnings season more interesting and more exciting too by looking at these charts. I'll be tweeting out a lot of these charts all throughout earnings season. You can find me on Twitter at my name at Tracy Reineck. I'm also be putting them on Stock Twits, so you can find me over there. But be sure to get us somewhere, and I'll see you later this week with the Earnings All-Stars videos on the banks.